Happy Africa Day from us at News Central to you and yours across the continent. Our headline story, review of African births. Now today is Africa Day 2021. It marks the founding of the Organization of African Unity on May 25th, 1963. The OAU is the predecessor of the African Union, AU, which was founded in 2001. On Business Edge today, we'll look at some of the major stock markets across the continent and how they've been performing. I'm Tolulakwe Adelaru Balogun. Welcome. This is Business Edge. Africa is home to 29 exchanges representing 38 capital markets. 21 of the 29 stock exchanges on the continent are members of the African Securities Exchange Association. The Egyptian Exchange, founded in 1883, is the oldest stock exchange on the continent. That's followed by the Johannesburg Stock Exchange Limited, started in 1887, and the Casablanca Stock Exchange of Morocco, founded in 1929. In terms of value, the Johannesburg Stock Exchange is the largest, followed by the Nigerian Exchange, the Namibian Stock Exchange, the Zimbabwe Stock Exchange, and today, the Casablanca Stock Exchange rounds up the top 5. Now, I have financial analyst and the CEO of Astro Dynamic Solutions, Muktar Mohammed, joining me as we take a look at the performances of some of Africa's exchanges in the past year. Muktar, welcome. Thank you once again for being our guest on Business Edge.
My pleasure, Tolu. Good morning.
All right, let's start with this. So according to the World Bank, Zimbabwe's economy is set to rebound by more than plus or minus 2.9% this year, despite an economic crisis that's been aggravated by the COVID-19 pandemic. What do you think would be responsible for the growth Zimbabwe is expected to experience?
I think it has to come from their rural agricultural project using the monetary policy, because they're trying to make sure that they have food, especially to their citizens, by the rural agricultural project that they are doing. So that is going to be, that's going to be responsible for the kind of growth that we expect to see in Zimbabwe. That's what we keep saying when monetary policy and fiscal policy are on the same line. They seem to be on the same line in Zimbabwe, especially in the area of food production for the consumption of their citizens.
So let's look at some of the data before we get into Zimbabwe's birth. So their GDP in 2019, of course, we're still waiting for 2020 figures, according to the World Bank, was $21.44 billion. The per capita GDP per capita was $1,463 US. Now, GNI per capita was 2,704 PPP dollars as well. But the growth rate that they had in 2019 was actually minus 8.1% of the annual change. Now we're seeing plus or minus 2.9%. And we know that that 2.9% is not enough. Is there anything that Zimbabwe can do to increase the level of what we're expecting in terms of their economic rebound?
Well, because Zimbabwe, they have a major challenge, which has to do with their currency violation. Then their inflation also is very on the high side in Zimbabwe. So basically, those are the two issues they really have to tackle. Because you look at their currency violation and their is one of the highest in the nation in Africa in terms of the dollar to their own currency there. So it's a big problem for the Zimbabwe economy. Has been a problem for a long time, and it's still a major problem. And then secondly is the normal monster in any African country. Corruption also is eating deep into the Zimbabwe economy. So if they are able to tackle that and also begin to look how they can do, government can begin to get easy funding to the SME space there, because the cost of borrowing also is very high in Zimbabwe. Even if you revamp the cost of returning that, there's high inflationary challenges that the economy is dealing with. So the major challenges are three major challenges in Zimbabwe they need to do if they want to see a rebound in growth. They have to look at inflation, they have to look at their currency violation, and also they have to tackle corruption. And you and I know that those are not issues that will be handled overnight. Yeah. So they need to build institutions to be able to deal with these three very challenging challenges.
All right.
They need
So
to build their better. And you, and like I said, these are not things that we build over. Institutions are not built overnight. So it's going to be a long haul.
So they're not built overnight, and neither are they course corrected when they go off course overnight as well. So looking at the Zimbabwe exchange, the growth seems to be hinged more on agriculture and a stabilization of the food supply. Now, do you think these are stable enough to carry Zimbabwe's exchange through 2021?
Torilopo is very stable enough because in Africa, the major challenges we have is food. Once an African man has food on his table, other things are generally will be taken care of. And so you begin to look at once food is provided for their citizens, and they in turn will be able to export some of their food crops, especially into their neighboring country, the Southern African neighboring country. That will also bring a lot of return to their exchange. But like I said, the major challenge will be coping with food inflation. And when you look at the return by the inflation that they have in Zimbabwe at the moment, you see that the return is still very appalling, even if it seems to be one of the best performing exchange in Africa. But when you look at it by inflation, it's still one of the worst performing exchange in Africa.
So before we move away from Zimbabwe, we have seen some investment coming into the country, and in recent conversations, there has seemingly been some positive moves made by the administration that seems to be paying off now. What do you think is driving the investments we've seen in the past 6 months, in the past 1 year, and some of the things that government is doing that seemingly is paying off to giving us some of these positive figures we're looking at now?
Yeah, to when you look at some of these investments that are coming in this country, you know that some of these investments are coming in from the agricultural sector. That's what they are looking at, providing end user chain for those agricultural sectors. Those are the kind of investment you've seen because they've seen that government have been able to bring policy that is attractive to them, policy of trying to meet up with food production, monetary and fiscal policy coming together. So investment is coming from that space into the economy. So when you look at that, then you know it can be sustained because you are looking at a long-term chain and government policy on that area is definitely going to stay there going to be there for a very long time. So for me, that is what is responsible. And whether they will sustain it is up to them if they continue what they are doing, because that seems to be a program that is far of too much of corruption, too much of interference from government. It seems to be a public-private sector initiative. So when you look at that, then you say definitely they will be able to sustain it if they continue with same policies that they are using now.
All right, so let's move now to Namibia, another country that its stock exchange seemingly has done quite well in the past year. The African Development Bank projects that Namibia's economy will grow, here we go again, by 2.6 plus or minus percent in 2021 and 3.3% in 2022 on the back of a steady recovery in financial services, tourism, retail, as well as wholesale trade, and the mining industries. Now, this will be combined with an improvement in regional and global economic environments. But this economy, like many others, still faces substantial risk and challenges in the short to medium term. Muktar, how can Namibia address the risk that might stand in the way of its making progress in terms of its economic recovery?
Policies still seems to be the challenge. It's not only in Namibia, all over Africa, but policy seems to be the challenge. And then Namibia should also be looking at fighting corruption, because it seems to be a monster that is in virtually every country in Africa. So if they are able to handle those two issues, then they will. When you look at the Southern African region, there seems to be the one after Botswana, you have South Africa, then Botswana, then you have Namibia as one of those shining lights in the Southern African economy at the moment. So it's still something that they really have to work in their microeconomic stability, especially with utterances or policies from their central bank. So that will definitely help the Nigeria and the Namibia economy sustain whatever they are doing now.
But there's something you'll notice in a lot of the data coming in, particularly from the World Bank and others. The growth rates for these economies, we're looking at 2.6, 2.9, 3.3. A lot of people are not in the double digits. A lot of the economies are under 5% in terms of the growth rate. And even though it's a positive growth rate, that's a problem. Muktar, how do they address these issues? It's a good thing that they're growing in the positive side of things, but the amount of that growth is a very big challenge for a majority of these countries.
So sometimes you look at where a man is coming from to determine where he has gone to know how far he has gone. You look at a continent that is coming out from the pandemic. You look at a continent that have poor healthcare facilities or healthcare policies. And here we are, a continent that is not ravaged with the pandemic. So when you look at that, what was obtained last year and what is obtaining this year, you seem to see there's a little bit of improvement because of maybe the vaccine that is already out, and then the policy and they are put in place by government, the lockdown that government decided, even some of the government of this country are still doing lockdown. So those are what will be the key drivers of this economy. And I said again, monetary policy and fiscal policy seems to be on the same page also in Namibia. So that also is helping their growth.
So let me ask you this. For many people, it's no surprise that Nigeria and Johannesburg exchanges are the largest on the continent. But when you look at these numbers that we're breaking down in some of the movements, you're hearing Namibia, Zimbabwe, Casablanca. And there will be people who wonder because they're not traditionally the exchanges you would really keep an eye on. So Muktar, tell us, what's happening? Do you think that there's a commonality in what's happening in these exchanges and the economies that we should be paying attention to right now?
I think we should be paying attention to the low valuation of most of the equity in those countries, especially the multinational equity, the times of low valuation compared to what you have in South Africa, compared to what you have in Namibia, compared to what you have in even Egypt. So investors are looking for high return and looking for price valuation, which is very, very low in Namibia, is low in Zimbabwe. Then again, you remember that most of the people that are driving these two exchanges are not indigenous. They are foreign investors that are in terms of return in dollars to Namibia currency. They seem to have a gain. So what you use about $100 to buy in a place like Nigeria or South Africa, you can buy that 100,000. You can get about 300,000 units for that in Namibia. So most investors are looking at times in terms of the kind of return, because the higher the risk, the higher return. And also you are looking at a country that have been ravaging through war and the other challenges, and you have the capacity to take the risk, then you'll be able to benefit from it.
All right, Muktar, let's take a break. We still have more to talk about in this, and we'll look at Egypt, Ghana, and Nigeria and how they've performed as well. Also looking at South Africa, which is still in recession but seems to have a better trading performance. This is Business Edge right here on News Central. Do stay with us. And this is Business Edge. We're still looking at the performance of some of the stock exchanges across the continent. Muktar Mohammed, the CEO of Astro Dynamic Solutions, is still with me. So Muktar, we've talked about Namibia. Let's focus on South Africa now, but inclusive of Namibia as well. The JSE All-Share Index saw about 12.58% and 10.62% growth, respectively. It posted the second and third performing exchanges on the continent. So we know South Africa is still in a recession, battling decade-high unemployment numbers as well. Some cities in the country, some regions in the country are even in a third wave of COVID-19, or rather of the COVID-19 pandemic. But trading seems to have been a bit better for some instances. However, Namibia has done better than South Africa in regards to this. What do you think are some of the factors driving the growth, particularly for South Africa?
I think South Africa is the financial hub of Africa, and a lot of companies make their leeway into Africa by South Africa. That also, and I keep saying the low valuation in terms of their stock. Remember, an economy that is coming out of recession, and like I always say, recession time is always an opportunity time for anybody that wants to invest. And people are looking at the low valuation of multinationals also in South Africa, and that is what is responsible for the type of growth that you are seeing in their all-share index. With, in spite of the pandemic, is their corporate governance is still being maintained. So people see that as also a way of attracting foreign investors. And if you go to the corner and you look at what is happening in South African Stock Exchange, most of the gain that they are getting in that exchanges has to come from foreign listing that are listed in the South Africa exchange.
So let's talk about some of the low trading we've seen. We saw low trading outcomes in Egypt, Ghana, and Nigeria. Nigeria seemingly have the least performance, or the worst performance, that followed by Ghana and then, of course, Egypt year to date. But these are traditionally economic powerhouses on the continent, and they have the least all-share indices for the year to date that we have right now. What do you think is accounting for this?
You know, the pandemic is still one of a big challenge. Then secondly, the macroeconomic stability of these countries are really being threatened. And also, for Nigeria, you look at the security challenge also is still a problem. And when you look at some of these exchange, sometimes the price goes down because of pressure for profits taken after seeing relative gain in some of this equity. That is what, in the Nigerian context, that's what is happening when they are marked down from stock like GTP, Guaranty Trust Bank, Stanbic IBTC also. They'll be marked down and they tend to control a large amount of the all-share index. So that is responsible for the downward trend that you see. But going forward, I think that trend can be taken care of.
Mm. So what potential is there in terms of exchanges across the continent to help drive the economic growth of their countries? How do they fall into play, or how do they become part of the equation when we're looking at recovery, when we're looking at economic growth as well across the continent?
Well, South Africa will seem to lead not so much because of anything more, but because of their infrastructure, because of their ease of doing business. They have policy in place between government, the monetary policy and the fiscal policy. I think there seems to be they will be the tick toes of every investor, and also the low valuation of some of the stocks that are listed in the Johannesburg Stock Exchange. That will attract a lot of investors into South Africa. Remember, that was definitely attracted investors into Nigeria 2-3 years ago because in terms of low valuation. So that is what's going to attract that the kind of inflow that you see in Egypt will be determined by this statement that I just said.
But that's talking specifically about maybe Nigeria now. In terms of the other exchanges, what are they looking at?
I didn't get you.
I said in terms of the other exchanges, we might focus on Nigeria as the largest economy. We might focus on South Africa as the most industrialized economy. But in terms of having the exchanges drive economic growth, what can we look at in terms of Namibia, in terms of Ghana, in terms of Zimbabwe as well?
You look at their, like I said, you look at their price valuation of the equity that are listed there and the type of international equity that are listed there. Then you have to look at corporate governance from this exchange stocks that are listed in the South Africa or Namibia stock exchange. There seems to be a lot of corporate governance in those cities, and also, like I said, the violation of some of these international prices are still very low, and then the ability to expand also when you are in these two countries is is there compared to other African countries.
So let's hear what the World Bank has to say on our post-pandemic recovery. So Africa is projected to recover in 2021 from its worst economic recession in half a century. That's in 50 years. We have not been in this place economically. So economic activity on the continent was constrained in 2020, as we all know, by the pandemic. Now, real GDP in Africa is expected to grow by 3.4%, again, single digits in 2021, after contracting by 2.1% in 2020. So this is a post-pandemic year. Vaccines are rolling out, even though we're seeing some people battle second and third waves of the virus. We are crossing our fingers that we don't go back to where we were a year ago. But do you see signs that economies across the continent are stabilizing and are going to reach the projected rates that we see?
Definitely, Tolu, I share that sentiment. I think they are steady. You need to look at all the exchanges that you just mentioned. They are steady, and even during the pandemic, it may be the company that were listed on that exchange that were not involved in day-to-day trading. Most of the equities that are listed on the exchange were open for business compared to other exchanges in the world. So I think I agree. But when you talk about the growth rates, it's neither here nor there.
Why do you say that?
Because the growth rate is really, it's most of the growth rate that we're going to see in some of this economy will be driven by activities in terms of opening up of most sectors that were not open before. And that will just add to the aggregate GDP. But when you talk about the GDP, that's the real GDP, the one that will affect the average Zimbabwean, the one that will affect the average South African, the Namibian citizen, the Ghanaian citizen, it has to come from the bottom to the upper proof. And I don't think government has said that yet, especially in the area of key intervention that government is planning to do.
That's interesting. Let me take you up on one other interesting point as we wrap up. So we've seen what the World Bank has said in terms of Africa's economic outlook and individual countries for the upcoming year. But interestingly enough, some of these countries have also come out with their own economic outlook, which happens to usually be a few points higher than that of the World Bank. So while you say, of course, this is not necessarily the numbers you're focusing on, and you're focusing more on the real GDP, what do you make of the fact that Zimbabwe and Namibia and Nigeria tends to come up with figures that are a bit more positive than those that come from the financial lender or the institutional bank as it is the World Bank?
Yeah, Tulu, I was just thinking about this today, but I just realized that you know yourself better than what other people. They might be doing speculation. You are doing real time because you see the trade volume, you see what you are doing, you see the result that's coming in compared to them that will be looking at the paperwork, trying to interview. And you know, in African countries, it's not easy to get data to begin to compile them, to know what the result really is. I think for me, that is what they should be looking at. But for what they expect, I'm not surprised for the kind of rate that we are expecting. And again, I don't expect you to be surprised because the government would rather aim high and come low than aim low and get lower.
Very, very true. And hopefully the high that they're aiming for is the high that these economies will hit in this 2021. Muktar Mohammed, as always, a pleasure. Thank you so much for joining me.
My pleasure to Lope. Have a pleasant day.
The same to you. All right, so we'll wrap things up with a quick look at a few stories we're keeping our eyes on. This is NC4 to watch. Now, the Kenya Tea Agency is joining the Nairobi Securities Exchange, or rather the Kenya Tea Development Agency Holdings PLC, has announced that individual smallholder tea farmers affiliated with the organization will have an opportunity to own direct shareholding of the company alongside their respective 54 tea factory companies. This decision comes after the KTDA shareholders amended the company's Articles of Association to enable the allotment of the company's shares to individual farmers under a new category of shareholders known as tea farmers. From there, we head to the Democratic Republic of Congo, where the president, Felix Tshisekedi, is seeking a review of some mining contracts with foreign companies as a lobby warns that the country will potentially lose at least $3.7 billion in skewed mining and oil deals with controversial Israeli billionaire Dan Gertler. Now, Kinshasa has already lost out on nearly $2 billion in revenue by selling mining and oiling assets to Gertler, and this is according to a coalition of Congolese and international organizations which have urged the government to review the deals. From there, we are in Nigeria, where the central bank has set a new capital requirement, more than one, for payout firms in the country. Now, this was disclosed in a circular titled New License Requirements for Payment Systems. The CBN stated that to have a payment terminal service provider license, a firm was required to have at least $100 million shareholder funds, 100 million naira shareholder funds unimpaired by losses. A retained super agent's license at 50 million naira, switching and processing firms license at 2 billion naira, mobile money operators license at 2 billion naira as well, payment solution services at 250 million, and payment solution services provider at 100 million naira. And finally, we are wrapping things up in South Africa, where the liquor industry has warned the government of the potential negative impact on economic recovery and jobs if another ban on the sale of alcohol is imposed. There are fears within the industry that have been growing since 3 provinces officially declared a third wave of COVID-19 infections, as this could prompt the government to implement stricter lockdown measures. Now, the tavern sector is worth about 60 billion rand annually, accounting for between 80 to 90% of liquor sales in townships and approximately 43% of total alcohol sales. A coalition of alcohol, or rather liquor traders, have written to President Cyril Ramaphosa seeking his audience to help find sustainable solutions to combat the pandemic without banning alcohol. And that's it on this edition of Business Edge. As always, follow us on social media. We are at News Central TV. Head to our website, newscentral.africa, and download our mobile app on Play Store and Apple App Store. Till next time, I'm Tolulope Adelaru Balogun. And once again, happy Africa Day.